Good evening. It's Brian Paraganian, Senior Trader and co-founder of ProfessionalStockTraderLive.com, bringing you Wednesday evening's technical analysis update for February 25th. And what a week we've got developing here. 250 points down on Monday, Tuesday up 236 points. Today we ended up closing down 80. At our worst level, we were down 160, 170. At our best level, we were up around 60 points. We settled down 80 points on the day, and late in the day we were actually really good, and you almost kind of had the feeling that maybe, just maybe, they might be able to surge this here and break that out of a downtrend. But guess what happens? Late in the day we have the president come on, we have Timothy Geithner come on and talk on TV, and this is what the result is again. Every time it seems like they come on and talk, we have them doing some damage to the markets. And let's talk about what we just mentioned here, a downtrend that we were hoping would get taken out on the Dow. And let me draw this in here right now. If we take a look here, we actually slightly penetrated the downtrend here today. If we zoom in on this here, and let's eliminate this. Let's eliminate this trend line. If we take a look here, we've got a downtrend line that we actually got above here intraday, but we did not close above it. And I think that's the key. I'd like to see the market close above this downtrend line, which then I think would give us some oomph to the upside, where we might have an opportunity here over the coming weeks to rally back up into the 7,800 area, which would be a nice rally. And that's kind of where we broke down from initially, down in the 7,800, 7,900 area up in here. And I think we're still heading in that direction. You know, we had a McClellan oscillator at a very oversold reading of minus 366 after Monday's market. Tuesday, after the rally, we had a negative 196 reading. So we're still oversold. And now after today's session, we're probably going to be back over 200. But I'm still positive on this market because we are so oversold. And if we take a look at the stochastics on the Dow, which turned as bullish here a couple of days ago because we did have a buy signal signified, but if we take a look here, we're still on a buy signal, and look where we're still located. We're still well below the 20 line, very oversold, but on a buy signal. We held the lows from yesterday, and we turned back up. We did close down 80, but let's hang in there. Let's stay positive. I think we're still in a position to rally, and I think we'll do just that. And I've got a couple of reasons why I think that. One is, let's take a look at the gold futures. We've been bearish on gold here for a period of time here now, and over just the last 3 and 4 sessions, we thought gold was topping out. And we've got a couple of uptrend lines here that I want to look at. As you can see, the one uptrend line comes in right in here on the 940 area. And today we had gold close down $20 an ounce, as you can see here, settling in around $950 an ounce. We have a longer-term uptrend line going back to November, and that comes in the 880 area. And I think that's the more important trend line that we need to keep our eye on. And you can see here, this white line here, the 50-day moving average comes in around 890. So this 880 to 890 area, I think, is a very important area right now. And I'm going to actually look to get short gold on any subsequent rallies, and I've said this here over the last couple of days now. Any subsequent rallies where we can draw a downtrend line and short it up against a downtrend line. I think that makes a lot of sense here in this environment. We can assess our risk on it, shorting up against a downtrend line, and I think that's the way we're going to look to move, is shorting gold up against the downtrend line, if in fact we get the rally that we're hoping we get there. But on a shorter term basis, we think it's still vulnerable, and we think that means the stock market is poised and ready to rally. The other thing we want to look at is the oil futures, and here again, here's another one that we think signifies a stock market rally. I've talked for a long time about the stock market and oil kind of trading together. Well, today oil was attempting to break out of a downtrend, and I think it's going to happen here in the coming days. We had oil close up $2.46 to $42.42 an ounce, while the stock market was down. And I've talked about how gold and oil kind of follow each other. And as you can see here, I think with the fact that oil is rallying here, on the verge of breaking above its 20-day moving average line and getting very close to breaking out of a downtrend that comes in at 43.70. I think this is a telltale of things to come for the stock market as well. And speaking about the stock market, kind of reviewing our positions that we do have right now. Apple Computer, we are long some options there. The stock closed up today despite the market being down. We're long RIM, the stock itself, the stock up despite the market being down. We're long Goldman Sachs options. We're okay there. The stock closed down $3. We're not dissatisfied. We raised our stop to 12.20 on the trade, and is it 12.20 or 13.20? I cannot recall. Actually, you know what? I think we raised it up to 13.20, so we're locking in. It's either 12.20 or 13.20, but we're locking in a $2 or $3 profit there, $2 or $3 profit there. So we're not displeased totally by the tape action. We still are positive here on the short term. Coming into the end of the month, we think there could be some month-end squaring, and we're looking for the stock market to regain itself. And a little pause refresh here wasn't a bad thing. I just would not have, I would have preferred to have seen a market close firm today as opposed to selling off. As you can see here, the futures closed down 8.5 points, closing, or actually 6 3/4 points. That was the NASDAQ we were looking at, closing at 762. So they are at a slight discount to the cash on the S&P, which closed at 765 basically. It does indicate as of now, and this is all preliminary, it does indicate a slight downward opening tomorrow, but we're going to remain optimistic based on the divergences we had when we tested out the lows, and we're going to remain positive here that we think the market is poised to rally to the upside in the coming days and weeks. One stock we're only going to talk about is Visa, and we think Visa is positioning itself just as MasterCard is getting ready to move to the upside. And this is the only stock we're going to look at from a trading perspective. This stock here is very close to breaking a look at this here, a downtrend going back to last June. So we think this is something you really want to pay attention to. You can see here the downtrend comes in probably, it looks like in the, let's see here exactly where it comes in. Looks like it's going to come in around the 57.25 area. So this is a stock we'd look to have on your long side radar, Visa. Today this stock closed down 93 cents, but 57.25 we think breaks us out to the upside. And if you look at it on the charts here as well, 58's been a spot where it's been kind of been stopping dead. So above 57.25, we think 58's on tap. Above 58, certainly, you can see here the stock looks like it's poised and ready to break to the upside. So this is one we certainly would have on your radar, and we think this is a great trading idea in the coming days and weeks. Keep it on your list. I don't have anything else to add other than have a great evening. Thanks for tuning in. Keep the faith not only on our economy, but keep the faith that our trades are still in great position, and we think the market is positioned to rally. We're looking for a rally. So keep your heads up. All the trades we have, we're ahead on. We're just going to see if we can't get this stock market to rally for us here in the coming days so we can exit at even bigger profits. Have yourselves a great evening, and we'll see you in the morning.